The reason why Bear Stearns was exterminated and selected for execution was precisely because they were long silver. They were screwing with the powers that be. So they were selected for extermination. Morgan Stanley was never selected for extermination because they are part of the club. They are beholden to the powers that be financially, and their derivatives book was used to help support the U.S. debt markets. They were a willing accomplice to generate artificial demand for U.S. government securities. I mean, we are not generating wealth. We are debasing currency, and the economy is digging itself into a hole that I don't believe we are ever going to be able to escape from. To me, the fate of the dollar as the world's reserve currency is absolutely sealed, and the dollar will lose its position as the world's reserve currency. This is now baked into the cake, and any illusion of there being strength in the dollar is an opportunity to buy alternatives, whether it's gold, whether it's silver, whether it's Bitcoin, or whether it's productive farmland, or whether it's storable food, or whether it's guns and ammunition to protect it all. Because this is where we're headed at breakneck pace. You know, I want to remind people where I come from in saying that there are things wrong in our capital markets. My background is in derivatives, okay, credit markets, interbank dealings. I used to deal with, for about 15 years, I dealt with the treasuries of major financial institutions. And I transacted interest rate derivatives between these financial institutions. And during the financial crisis of 2008 and 9, I paid particular attention to the derivatives books of major financial institutions. And during the financial crisis, Bear Stearns went out of business, Lehman Brothers went out of business, Merrill Lynch would have gone out of business, except they were able to successfully marry Merrill Lynch to Bank of America. Morgan Stanley should have gone out of business, and they were perhaps the worst credit in the whole banking industry, but they couldn't find anyone stupid enough to take them over. So they recapitalized Morgan Stanley by having the U.S. Treasury, through the Exchange Stabilization Fund, grow their derivatives book. Understand, interest rate derivatives are credit instruments, and they require both sides of the trade to have reciprocal credit lines for each other. In a 9-month period, Morgan Stanley grew their swap book, their OTC swap book. And you see, when you talk about what an OTC swap is, it's synthetic borrowing and lending. Now, I'm not going to lend you money unless I think you're going to repay me, whether it's a real loan or a synthetic loan. I need to, you have to be an acceptable credit for me to enter into that trade with you. Well, Morgan Stanley in 9 months grew their OTC swap book by $10 trillion. And let me tell you something. The odds of Morgan Stanley being able to execute $10 trillion worth of trades in the OTC swap market in a 9-month period is like you telling me you can hold your breath and swim across the Atlantic Ocean. And you see, Dunnigan, if you tell me you can hold your breath and swim across the Atlantic Ocean, I say you're full of shit. You're lying to me. You're lying to me. Okay? Because nobody can do that. Well, no bank in the free market can grow their derivatives book by 10 trillion when they're a rotten credit. No bank, no financial institution can grow their book by 10 trillion in 9 months. Period. Non-starter. So, and that's what exposes who the counterparty was for those trades. It was the Treasury. And the Treasury is the only entity on the planet that had the vested interest and the firepower to conduct that trade with Morgan Stanley. Okay? Derivatives can tell us an awful lot about the financial landscape. You see, Bear Stearns, for instance, when they failed, there are some people in the world who think that Bear Stearns was short silver. Okay? But when Bear Stearns got finally taken over, I mean, they disappeared, but who absorbed Bear Stearns? It was JP Morgan who absorbed them. Okay? Now, when Bear Stearns' derivatives book was added to Morgan's derivatives book, one thing we do know for sure, JP Morgan has been a serial paper short in metal. Serial paper short in metal. And yet, when Bear Stearns' derivatives book was added to Morgan's, their shortness of silver reduced. Therefore, the only possible way you can add that up, Bear Stearns was long silver. Because when you added their position to JP Morgan became less short. And the reason why Bear Stearns was exterminated and selected for execution was precisely because they were long silver. They were screwing with the powers that be. So they were selected for extermination. Morgan Stanley was never selected for extermination because they are part of the club. They are beholding to the powers that be financially, and their derivatives book was used to help support the U.S. debt markets. They were a willing accomplice to generate artificial demand for U.S. government securities. And the evidence for that is because their derivatives book was used in the support of, as evidenced by the growth of their OTC swap book by 10 trillion in the height of one of the worst credit depressions the financial markets have ever seen. So it literally jumps off the paper. And you see, we can go back and review this data. Okay, this data is all posted. So the trolls out there should go and read the Office of the Comptroller of the Currency's quarterly derivatives reports. They should go back in time and read the reports from Q3 of 2010 through to Q2 of 2011 and explain to the free world how Morgan Stanley, who was a crummy credit at the time, grew their OTC swap book by $10 trillion in 9 months. Because it's impossible that could have been done in a free market. And it wasn't done in a free market. It was done with the U.S. Treasury. And that's how Morgan Stanley got recapitalized. That's how Morgan Stanley lived to play another day. They couldn't find anyone to buy Morgan Stanley. Morgan Stanley was insolvent, so they decided they would recapitalize Morgan Stanley on the public tip using effectively, I love it when people say, well, if they did all these derivatives, who was the loser? Well, the loser was anybody who has a pension, anybody who saves money, because what they did is they artificially suppressed interest rates using interest rate derivatives, this whole activity of which Morgan Stanley was a key player in. Morgan Stanley was a winner because they got recapitalized, and anybody who saves money was punished because interest rates were forced down to zero. And interest rates should not be at zero. Just like crude oil shouldn't be trading at negative $40 a barrel. And the notion that it was forced to trade there in the paper market, Dunnigan, has anyone ever paid you to fill up your gas tank in your car?
No.
So do you really think that oil is worth less than zero?
Never.
And it never will be, because nobody's ever going to pay you to fill up your gas tank. Now, mind you, there are some Democrats who might think that you deserve a raise to sit at home, watch Netflix, and not go to work. I don't really ascribe to that notion of fair play and decency or properness in our capital markets. But you see, the whole issue is, and I highlight the activities that have gone on with Morgan Stanley in the past, because we have demonstrable proof that our capital markets are a cesspool, and that the long arm of government is actively engaged in creating predetermined outcomes. I mean, the powers that be did not want to see Morgan Stanley fail, because if Morgan Stanley had had a public failure, the supremacy of the dollar and the perch that the dollar has been on, undeservedly so for many years now, as the world's reserve currency, that would have been in serious jeopardy. And you see, when financial institutions start failing, they start behaving like dominoes. And the failure of one can lead to the failure of another and another and another in series. And this is why Morgan Stanley was spared, and why the decision was made to recapitalize them, because Morgan Stanley's books were too also conflated with other major financial institutions. You see, there's 5 institutions in America that dominate the derivative space, and they are J.P. Morgan, Citibank, Goldman Sachs, Bank of America, and Morgan Stanley. And these guys have, of all the American institutions, these guys have like 96 or 7% of all the action of all American banks. There are some foreign banks that are also captive and major players in the derivative space. But of the American institutions, those are the biggies. And just as Merrill Lynch was also a very big player with tens of trillions in exposure in their derivatives book before they were absorbed by Bank of America. And Bear Stearns was a player in derivatives, but they were most certainly long silver. They were most absolutely certainly long silver, which is why they faced the executioner's blade. And they were taken down as a result of that. Because when you add something to a serial short and it makes you less short, you've added a long. Plain and simple. Anyway, I like to point this out because there are times, I think, when we get out in the weeds talking about other nefarious activities on the part of officialdom in our capital markets, and people can lose sight of the notion and wonder just what's going on and what aim and to what end are the people in officialdom involved in our markets in the first place. Well, they're involved in our markets because they are at all costs trying to protect the preeminence of the dollar as the world's reserve currency. And the strength of American financial institutions is key to maintaining the illusion that the dollar is strong. And the dollar is not strong, because the dollar is being debased at a rate we have never witnessed in the history of humankind. The Federal Reserve is out of control printing money. And how the dollar can be seen to be strengthening when trillions upon trillions of new money creation is happening on a weekly on a daily, weekly, monthly basis. And this is not the key to currency strength. And I mean, it completely blows me away. I mean, I know what's involved to do $100 million worth of an interest rate derivative. I know what it takes and how long it takes to do 50 or 100 million 5-year interest rate swap. I mean, I've done those trades between banks in the real market. And when you execute $100 million 5-year interest rate swap, it can take hours to close the trade, because what happens when the trade gets executed is they typically go into a spread lock. Usually there's a consultation that's required with a credit department or a credit officer before the trade can close, and these things take time. But when you're growing your book, if you're growing a book by 10 trillion in 9 months, like you have to be closing you would have to be closing $100 million trades like this every second, for every minute of every hour of every day in 9 months. You would literally have to be saying yours, and no credit to be concerned about. But you see, the reality is, when you're dealing with the government, there's no need to check credit, because when you're trading dollars and you're dealing with the U.S. Treasury, there's no question as to whether the U.S. Treasury is not going to have the dollars to pay you, should they have to pay you. And the amounts that we're talking here that were transacted with an insolvent party in such a very short period of time, it's off the charts. It gets completely off the charts, and it's an insult. It's an insult to intelligence to even publish data that says that an insolvent company like Morgan Stanley at the time grew their book by 10 trillion. It's like saying 50 pink elephants just flew past my window. Is that credible? Am I to be taken seriously when I make pronouncements like that? Well, the very fact that they're telling us that Morgan Stanley could grow their book in such a fashion, and in such a short period of time, in such a credit-challenged environment, is absolutely hokey. It's ridiculous. It's beyond ridiculous. It's a lie. It's a blatant lie. And it's very sad. And yet there are trolls who will question. There are trolls who will question someone pointing out that pink elephants don't fly, and it's like, how do you know pink elephants don't fly?
Well, that's why we're having you here, is to help us see things in a way that we're not going to see if we just, and most people don't even know to order those reports or how to read them if we did. So we're glad for your perspective that opens that up for us. Now, much of what you described happened 10 years ago, and now you talked about the scope and scale of what's happening now. Can you bring us some perspective based on the kinds of numbers that are being publicly announced now?
Well, sure.
How does this compare to what was going on then?
Done again. What it really comes down to, with the number of trillions of new money that's been created, to see the price of even gold and silver today taking a breather, some would say, and then of course there are trolls who say, well, markets never go straight up. Well, you're right. Markets never do go straight up, but when you're insolvent and bankrupt, you don't have flashes of solvency and flashes of having lots of money. When you're insolvent and bankrupt, you're screwed. Your money spending days are over. When you're bankrupt, you have no credit. Okay, so it's not like bankruptcy has ups and downs in it, where one day you're flush with money and the next day you have none. When you're bankrupt, you're gone. You're finished. You're done. Okay? The credit cards are canceled. They're taken away. So, the notion that the dollar being debased at the rate it is, and then to see days when gold and silver are under attack, relentless attack, and to see the macroeconomic backdrop of businesses all being shuttered, people at home, people not working in absolutely mind-bending record numbers, and to see the stock market spiked higher. I mean, these are interventions. We're witnessing interventions. We're witnessing interventions on a daily, weekly, monthly basis now. It's full-time intervention, and I just want to mention that a guy who has coined a phrase back a number of years ago, Chris Powell, the Secretary Treasurer of GATA, many years ago made the statement, "We don't have markets anymore. All we have are interventions." And I mean, that is a very apt way to describe our capital markets the way they are today. We go from one intervention to the next intervention to the next intervention. Everything's artificial. Everything is counterintuitive, and it's disgusting to watch, and it's beyond speakable to look at the degree to which our financial markets have been made absolutely hallucinogenic. And all this has been done with money that's created out of thin air. I mean, we are not generating wealth. We are debasing currency, and the economy is digging itself into a hole that I don't believe we are ever going to be able to escape from. To me, the fate of the dollar as the world's reserve currency is absolutely sealed, and the dollar will lose its position as the world's reserve currency. This is now baked into the cake, and any illusion of there being strength in the dollar is an opportunity to buy alternatives, whether it's gold, whether it's silver, whether it's Bitcoin, or whether it's productive farmland, or whether it's storable food, or whether it's guns and ammunition to protect it all. Because this is where we're headed at breakneck pace. Sorry for the enlightenment, but this is unavoidable at this point. No amount of trolling will alter what's been put in the oven and what's going to be taken out of the oven. And troll away, guys. For all you trolls out there, good luck and happy sailing, because we're headed for dark waters.
That's the other thing I was going to mention is another area which people have criticized GATA or criticized your analysis in the past was about such things as the exchange stabilization fund and intervention in pricing of equities and so on. But now we've even had that admitted from officialdom that that's what's happening. They're outright coming out and stating the facts.
Well, there's been an acknowledgement that the exchange stabilization fund exists, which is a bit of a switch, because I mean the exchange stabilization fund was created in 1934. It was seeded with between $2 and $3 billion in 1934, which made it literally overnight made it the most powerful financial entity on the planet. And isn't it amazing that the most powerful entity ever devised or created by mankind can operate without any public disclosures from 1934 right up until about a month ago, when Lawrence Kudlow, economic advisor to President Trump, actually admitted that the ESF existed and said that there might be a part for it in the near future. And to me, all that is telling us is that the ESF their activities have become so enormous that they have to acknowledge A, that it exists, and B, that it has teeth. And at least in my view, anyway, this is an acknowledgement that the ESF is going to probably have to be playing a bigger and more visible role in the very near future. And this is a way of deflecting attention away from it, because as its activities become more and more necessarily visible and people complain that it's interference, they're going to say, well, no, we dealt with that. We admitted that was there, and that it was going to have a useful purpose. Let's put it this way. The Exchange Stabilization Fund has been engaged in our capital markets for an extremely long period of time. Now, some people might know the ESF as the plunge protection team. Some people might refer to it as Fed being engaged in our financial markets. Let's make this very clear. The Exchange Stabilization Fund, by nature or by definition, everything that it does involves national security and doesn't require any disclosures or any oversight from Congress at all. And when the ESF engages in the capital markets, they have one outlet only to get to our capital markets, and that's through the trading desk of the New York Federal Reserve. So when the ESF is active in the markets, to people in the financial marketplace, it appears that it's the Fed. And that's done by design and on purpose. This way, the Fed takes the heat for what the Treasury's doing, and the Treasury is very happy because the Treasury does not want to be spoken of or being seen to be engaged in manipulating our capital markets. And this is why they have the cozy arrangement with the Federal Reserve to act as their exclusive broker. So, and the Federal Reserve takes the heat of being seen as the counterparty engaged in the financial markets. And in return for that, they have their monopoly power on the creation of money. So it's a symbiotic, cozy relationship. But this is why the ESF, and I mean, why Mr. Kudlow ever acknowledged that the ESF was going to have a role or a bigger role going forward, or a visible role going forward. Let me tell you this. Any role or any activity that's actually acknowledged that the ESF might be conducting in our capital markets, that also is a screen and a deflection, because everything that they have done to date has been done under basically in a black box. And the fact that they're talking about now having a transparent side to the ESF is another layer of obfuscation, and basically it's a huge game of hide the salami. And you can never guess how much intervention they've done. I mean, with the exception, of course, when you go to the books, the historical record on the derivatives front, you go to the historical record of the Office of the Comptroller of the Currency's quarterly derivatives reports, you can see, looking back, because these things still exist. You can go and review these things on the internet. And like I'll say it again, dear trolls, please explain how a bankrupt entity can add $10 trillion to their derivatives book, OTC swap book, in 9 months. Please explain it. Okay? Because there is no explanation.
Back to this historical lag before the so-called truth comes out. Two questions about that. One, how long is that lag? If we can look back 10 years and we can see things we didn't know were happening at the time, how long will it be till we can look back and see what's happening now that we can't see at the time?
Well, the evidence will surface. I mean, it's very interesting. I spoke of, for 8 or 9 years, I spoke of the Exchange Stabilization Fund being active in our markets. And a lot of people were saying, well, there's no visible evidence of this money being put to work in our capital markets. And I mean, I knew the money was being put to work, but isn't it interesting, because it was just about 2 years ago now that the work of Catherine Fitz and Dr. Mark Skidmore came to light, where they went back and reviewed the Department of Defense's financials from the years 1998 to 2015, and they found that 21 trillion has gone missing. So to the people who used to ask me, where does the money come from to fund all these nefarious interventions that you speak of? Well, there's your proof. $21 trillion worth from 1998 to 2015. And more current work currently underway by Dr. Mark Skidmore, reviewing 2019 books of the Department of Defense and the U.S. government. Skidmore is concluding that there's very possibly, maybe up to 10 trillion that went missing in 2019 alone. Now, I mean, the numbers are getting bigger. So the whole issue is, with regards to our fiat money system with compound interest, fiat money with compound interest as an entity is a very unstable structure, because the compound interest on fiat money in a debt-based economy necessarily leads to exponential growth or vertical growth of money. And the vertical growth of money is very consistent with everything that I've just described. It's very consistent with the notion that 21 trillion went missing because it had to go missing, or it had to be created to be fed into the system to keep this unstable structure moving. And Skidmore's latest work shows that the problem of missing money has increased dramatically from the year 2016 onward. And what this is supportive of is this whole notion that we are growing money at a vertical pace. The currency is being debased at a record pace, and it's accelerating. Just as the work of Chris Martenson in his crash course explained the effects of compounding and exponential growth of money. You know, this is a very unstable structure, and we are creating money, and the really big issue confronting the monetary powers is where the next allotment of money that will be created, because it must, and where are they going to put it so it doesn't impact the domestic economy in America, producing hyperinflation, because we are seeing record amounts of currency debasement and money creation, and typically that leads to hyperinflation. And the fact that we're not hyperinflating already visibly is very likely due to military adventurism on the part of America, where they've spent trillions making pockmarks in the sand in the Middle East, and adventurism in terms of creating such entities as Space Force. How about 11 nuclear aircraft carrier battle groups sailing the seven seas? I mean, how many other countries in the world have 11 nuclear aircraft carrier battle groups? How many other countries in the world have an air force the size of America's? How many countries in the world have the military hardware that America possesses? The answer is zero. Not even remotely close. I mean, if China, whose I don't know, their GDP is what, a fraction of America's, maybe a $3 or $4 or $5 trillion economy at this point, where America purports to be, it won't be anymore.
No, it won't.
But it used to purport to be an 18 or a $19 trillion economy. Those days are gone. But if China only had military spending a quarter of America's to be commensurate with their GDP versus America's GDP, China would be spent into oblivion if they tried to even on a pro rata basis tried to spend on military like America. Like the point I'm trying to make here, America's spending way more money than what is publicly accountable for. Okay, America, there's excess money. Okay, and it's visible. It's absolutely visible. Why is there never a concern on the part of American lawmakers whether they can afford to move 11 aircraft carrier battle groups anywhere? Why is there never a consideration? There's always a consideration if there's a social program that somebody might want to bring forward, but there's never a consideration whether we can afford to invade Venezuela, whether we can afford to have a new war with Iran, whether we can afford to have a new war with Syria, whether we might decide to go to war with China. There's never any consideration for anything that the military complex desires or wishes for, or whether they need a new weapons platform, whether they need the latest new jet, fighter squadron. It's just absolutely ridiculous. I live in a country, Canada, okay, and it's like we have trouble finding money to keep 50 aircraft for our Air Force in the air. America has no problem with 5,000 of them, 10,000 of them, 100,000 of them, and the pilots to fly them and the support that goes with it. But comparing Canada's military to America's, of course, very foolish. But yet, it's people in America who say that Iran is such a complete and utter danger to the world, and their military spending is less than Canada's. So how is it that there's such a threat, but Canada's just an afterthought and a nothing?
That's because you guys are so nice.
Well, let's put it this way. Our spending in the latest yearly data available, Canada's military spending was 21 trillion, and Iran's was 18. Okay, but Iran, of course, is gonna take over the world and create panic in the world. So think about it. Just think about it. The optics with reality. We're fed a line on everything. We're fed a line. Our capital markets are a distortion, a rude distortion of reality. The geopolitical narratives are, for the most part, a rude distortion of reality. We are living in the Matrix. Get used to it. And you know what? The narratives, the false reporting and the narratives that we're being sold or that are being shoved down our throats will not alter the fact that the dollar is going to fail. It's failing in front of us now. Okay? It's like the music has already stopped, but people are not yet trying to get a seat because the game of musical chairs is over. And, best you get a seat now because they're going to be in very short supply in the very near future.
One thing you mentioned there was the books that we're being allowed to see from the past. I don't know how confident we are that that's the whole truth. It's part of the truth, at least, and we're not being shown much of anything now. We're pretty much in the dark with the passing of FASB 56. Of course. What chance is there that we're ever going to find out the truth about what's happening right now?
Good question, Donegan. What we need is more transparency as opposed to less. And with the passage of financial legislation like FASB 56, where the United States government has excused themselves of accounting, does nothing to instill confidence in our global capital markets nor does it do anything to instill confidence in the dollar as the world's reserve currency. And as another nail in the coffin, I would have it that the dollar is going to lose its position as the world's reserve currency.
So that's the next question I had, was when you were contrasting the spending power, the apparently unlimited spending power of the United States in building up its military or anything else, in projecting its influence around the world, you were using the word money. But if we replaced that word with currency and say, and compare the strength of the U.S. to, for example, China, if we're being told the truth that China was accumulating massive amounts of gold, for example, over the past 2 to 3 years, versus we don't know what the U.S. has, is it possible that when the blinders come off and it's no longer who has the most funny money, monopoly money, currency, but who has the most real money, gold, that'll be a big shift in balance of power?
Very likely. And China has been very aggressively accumulating gold, as Russia has too, for a lot longer than 3 years. This has been a project of theirs that's been ongoing now for better than 20 years, and it continues to this day. And do we wake up one morning and find out that the dollar is no longer acceptable in international trade, and there's a new currency on the block that is backed by gold? And that could very likely come to us, compliments of the Chinese. Wouldn't shock me if it happened. And, to me, it's inevitable that it does happen. So let's leave it at that.
The other thing that I wanted to circle back on was you mentioned earlier about that mysterious and irrational bailout of an insolvent bank with adding $10 trillion to their books and so on. You said, who would lend money to a bank that's or any entity that's insolvent? The question, if you take that a step farther, is there's more than one reason you can lend money to someone. One reason is you're looking forward to a return on that. You want to see that be repaid at interest in the future. But isn't another possibility that it makes the other one a debtor and it puts you on top and you become the buyer and lender of last resort, the owner of everything? Is that all right? What's your opinion on the theory that the Fed has positioning themselves, or if the Fed is just a front to the Treasury or whatever, that as far as being the ultimate owner, the banks being the ultimate owner of everything?
Well, I mean, that's a consequence. That's a consequence. Effectively the banks owning everything at the end of the day. That's a part of the consequence of rigging and having manipulated capital markets, which we do have in spades. Absolutely. But the notion that Bear Stearns was allowed to fail and that Morgan Stanley was selected to survive, it's indicative of, and it's illustrative of, the fact that our capital markets is basically an old boys club, where people who play the game and are supportive of the powers that be are supported, and people who buck the trend are eliminated. It's the same thing happens in politics. Your President Kennedy wasn't happy with the military-industrial complex and wanted to rein them in big time. And isn't it interesting how he got eliminated from the scene with a bullet through his head or two? We don't really know, unless you believe in magic bullets, of course. Just like you believe in magic events in our capital markets, like Morgan Stanley putting on $10 trillion in notional in their derivatives book in 9 months, which doesn't happen either. So not in the free world. And I don't believe in magic bullets, and I don't believe that Morgan Stanley could have legitimately put on that kind. But we know they put it on because we have the records that they put it on, because they fill out daily call reports and they submit them to the Office of the Controller of the Currency, who tabulates this stuff on a quarterly basis and then publishes it in arrears. So you see what's going on today in the derivatives markets. We will get no gleaning of it at all for at least 6 months. So you see, you're always looking through the rear window to make sense of what's occurring or what occurred. It's sort of like accident reconstruction. But you can do some macro accident reconstruction by looking at the numbers, because the numbers don't lie unless you're being given false data. Okay? And we know with a pretty high degree of confidence that inflation data is manipulated. We know that employment or unemployment data is managed or manipulated. Because we've got the works of John Williams at shadowstats.com.
Yeah, he's coming to our channel next week.
Well, and a great guest he is, because he's been pointing out the inconsistencies in data reporting on the part of officialdom for a very long time, and how things are adjusted, or they don't even mind telling us that. They tell us they adjust things seasonally. They've even created words, they call them hedonic adjustments. With things like birth-death models, and it's these are the same kind of models that people use to tell us how many people were going to die from COVID-19. Okay. Who is it? Niall Ferguson in the United Kingdom, who said there were going to be 500,000 deaths in the UK and 2 million deaths from COVID in America? Well, guess what? The model was wrong. Okay? Because, the deaths haven't happened. They haven't happened. And I'm not saying nobody's died. Yes, some people have died. But the models were wrong. Now, these are the same people that do the modeling that tell us that what the employment data is. These are the same people that do the modeling that tell us what inflation is. They have models for these things. But, as with the COVID models, the economic models that they use to produce their data sets that they feed us, they don't work any better. Okay? And we can go back and review the hard data that's been submitted by the banks to regulatory bodies that have been published in aggregate form, and we get a much different picture than the reality or the false narrative we've been fed. The reality doesn't fit the narrative. Okay, and there are some data sets we can go and review to get a dose of reality, and reality does not match the data. So troll that, guys, and try to explain that, because there is no explanation. It's fraud. It's the biggest fraud ever perpetrated on humanity. And you know what? And the shine is coming off. The veneer is coming off this disgusting, rotten fraud.
And that's what our viewers are gravely concerned about, and how they've already been hurt by it. We've been hurt in many ways, from stagnant wages that haven't kept up with the true consumer price index that's really way out beyond what's been stated. Evaporated returns or yields on savings accounts, pensions, and that sort of thing. Ability for certificate of deposits or anything. People can't make anything on their savings, but now we're being hurt by it with massive layoffs, tens of millions, and so on.
That's right, Dunnigan. And just to finish the thought, these people who do the modeling, these guys have also modeled what the price of gold should be and where the price of gold is going. Guess what? Those models are wrong too. And they've modeled, and they've told us, or they have thoughts and pronouncements on what the price of Bitcoin is going to do, and they're wrong on that as well, because the price of gold, the price of silver, and the price of Bitcoin is going to be dramatically higher than these clown models that we've been force-fed for a very long period of time. You know why? Because they're absolutely fictitious, these pronouncements and these guesstimates. Okay? You know, it's like the COVID death tolls off by a factor of 200. Well, people who think that gold's going to 2,000 maybe, they're probably off by a factor of 100 too. Their models are garbage.
Related question from Sue Gibson, and then we'll have to wrap because we're out of time. Hi, Dunnigan and Rob. I've been preparing for the worst, but feel there are so many bases to cover. After precious metals, perhaps cryptos, food, shelter, and some cash, is there anything further Rob thinks will help everyone prepare?
Spiritually getting your house in order. Plain and simple. Where we're headed, metaphorically, we're going into a meat grinder, and best you have your spiritual house in order.
Well, thank you, Rob, as always, for joining us here. We've been speaking with Rob Kirby, the proprietary analyst and founder of KirbyAnalytics.com. Thank you for joining us this Thursday, May 21st, 2020.
It's been my pleasure, Dunnigan.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.